Good morning, everyone. Today's Monday. It's March the 4th, and this is the Futures in 5, taking a look at 5 different futures charts to get a look at market motion. We are breaking up and out. You can see some sellers up here at 2019. That's going to be what we'll watch for. We also have a little bit of technical divergence, and so the charts are cautiously long. That means if you take a trade, what you want to do is position yourself in the better range of having a pullback into a buy zone. Sometimes that bounce will not hold in markets like this where you have technical divergence, but they are also unlikely to hold if they break out. And so this gives you the easier edge to see, hey, listen, I've pulled back, I'm holding 28.12, I've popped up over my 28.14, which was the high from last week, and now I'm breaking my way higher. We've got 28.24 to really about 28.29 as the upside draft. SPX formations in the straddles are very tight. Volatility continues to really be much tighter in general, and so that gives us pullbacks being buy zones as the ordinary plan of motion. And you can see how very far away we are from these moving averages and from the 2-week VWAP, but higher lows, higher highs, and that is across the board. Taking a look at the NQ, same sort of thing. We've got a gap up here this morning, so any pullbacks down into the gap action event are going to be great. We've got some areas near 72.14 and then 72, where is that number? 72.24 to 72.30. Those are areas that are the next punches up to the north. Also technical divergence, but a ton of motion to the upside. So pullbacks or buy zones. Listen, if you chase the chart out of this range, the one thing you have to think about as you're looking at it with your tight time frames is, can I break these highs? If I see them breaking the highs, I'm all right for continuation to the upside. When it starts fading and heading lower, if you still hold your frontline support, you're still going to have the possibility of upside pressure. There's a lot of upside pressure really trying to hold here. I don't know if it's squeeze action. I don't know if it's people really being confident about buying areas, but here's how it always happens. Markets come into a place and there's a group think and a group thought about what is supposed to happen. And that was a breakdown, a breakaway, a fade, a move into deep support. So what people begin to do is they say, hey, well, I know it's going to break down. So what I'm going to do is I'm just going to short here a little bit at a time, and when it gets to the next high, if I've gone in too early, I'll just short some more. Well, eventually, that starts digging deep into your pocket, and what happens is a buy to cover occurs, and so what's happening, in my mind, is this grand grinding upward from people trying to get in front of a short and then having to get out, and the only way you can get out of a short is to buy, and that pushes the market higher. And so if we're looking at those places pushing the market higher, what we have to say is, you know what, here we are at our formations, I'm pushing higher, I don't want to get in front of any kind of swing short action, so I'm going to play my intraday motion, and that is my pullbacks or buy zones. My buy zones get into a resistance area, and then they collapse. At the point that they collapse, they begin to build more volume, and they move back to the upside, and that is across the board. Take a look at the difference between this formation, the ES formation, all higher lows, higher highs, and the YM formation, still lower. So there is definitely pressure sitting in this chart. It's still pullbacks or buy zones. Take a look at this. This is the arrow from last week. This morning came right into that zone. Old resistance, new support, bouncing. Where's it going to? Likely resistance. As it comes up into that area, it's going to see buyers. Pullbacks should still be buy zones. You should be in and out. Our probability mechanics that we put together really showing barely little more than a coin toss for continuation to the upside. Barely. And so that's just a hair more than 50%. And so what that tells us is, hey, listen, we're going to expand, we're going to come into resistance, and that resistance is going to push us back into support. This chart really trying to recover. And it's doing a fairly good job recovering, coming back. These are the levels from the last report that I did. I haven't touched these at all, the same ones, and they are moving into the old resistance zones. If we get here and we can hold, we are looking at more upside pressure. The problem is we have a divergent pattern that is simply telling us, listen, I could expand, but I'm going to expand into a resistance zone. So where my long action is going to be really is on the pullback and the hold around these levels. And if I choose in front of that, what I'm going to be doing is exposing myself to a little bit more risk. This entire market is filled with risk parameters. Here's one of the very interesting ones. I've got this on a 20,000 tick because it is falling like a stone. I mean, just looks dreadful, but this is a primary support area. If it doesn't hold 1286, it's got drifts down really all the way to 1276, but you can see all these wicks showing up at 1281. What is the first pass likely to do? It's likely to push you right into another sell zone. We are really selling off in this space, but it is a very big support area. So if you say to yourself, hey, this looks like a pretty good support area, I think I'm going to buy here, your stop should be that 1285, 1286 zone, and realize the first time it tries to get up there into 1290, 1291, 1294, you're going to find sellers. So it's really the pop and then the pullback that holds this 1291 that's going to see you in recovery. Otherwise, our chart's still in the fade zone. This one is very, very interesting. I really did think it would hold about 1290, but it's dropped another 40 ticks or so, and so we really have got to keep an eye on that. Good luck trading today.